Google and Smuckers and BlackRock getting some upgrades, and Sam Vadas back with me here taking a look at some of these big movers on Wall Street, Sam. So let's start off because we mentioned NVIDIA with the upgrade and the earnings, and then there's Alphabet Google with another upgrade here too.
This is sitting up 1% right now at the start of trade. In fact, this is one of our big winners off the back of the Friday session following the Supreme Court's tariff decision. So it actually rallied off the back of what had been a pretty tough time across the Mag 7 names, particularly given the so-called capex indigestion that a lot of the market had been suffering post-earnings. Let me run you through the news on this one this morning, because we've had an upgrade over at Wells Fargo this morning from equal weight now to overweight. So coming off the sidelines here with a price target of $387. That is marking it up from $354. And just as far as how this is currently trading at $317 and change. What Wells is saying here is that the company has a leadership position in the key 3 traits of an AI winner: customer data, distribution, and compute capacity. And they're really focusing on compute capacity as part of some of their notes this morning, also looking at Amazon and Meta. I'll get to that in just a bit. But basically what they're saying is that according to its capacity analysis, it confirms that basically Google Alphabet has an opportunity to exploit data and distribution advantages for consumer and enterprise AI products. So as it expands the company's compute capacity to 35 gigawatts, I should say, from 15. So that would be doubling it from the end of 2025 to 2028. Believes that it's extending its capacity lead relative to the hyperscaler group. So basically what it's saying is that as it looks to more than double its AI infrastructure, there is a view that gives Alphabet basically an edge over the other big cloud providers, the other hyperscalers like your Amazons, for instance. So presumably they're thinking here that Amazon's, or I should say Alphabet's expansion means that it can train better models, it can serve more AI users, sell more enterprise, and stay ahead of the competitors. Because Google very much, Nicole, is seen as having more sort of spending discipline here. It's also got more of those advanced AI partnerships as well. So as I mentioned, a lot of capex indigestion following this announcement. But I've got to point out that Wells Fargo has actually lowered Amazon price target this morning, but raised Meta's price target. So looking across the space, I think it very much seems to be the compute capacity that seems to be the line or the thread tying all these things together right now.
Yeah, and Google has, I mean, they have good cash on hand, as you said, the discipline that they have. And our last guest, Dale Smothers, was just saying how he's using, his picks were equal weighted S&P, as well as he had NVIDIA and Amazon, and that's because he wanted to do that balance, but thought we were going to be higher by the end of the year. You also have Workday, one of the names that had a downgrade ahead of its earnings.
Yeah, and this has been a tough time, obviously, with the software sell-off that we've seen. I mean, this has been a name that has really been dragged down as part of all these AI disruption fears. Nicole, we are under pressure this morning, as we can see here. I mean, this is being downgraded now from Jefferies to hold from buy. So going to the sidelines on this with a price target now of $150. This is down from $325. That is a considerable leg lower alongside this price target cut here. Basically, what Jefferies is saying is that the software names have been hit harder than the overall software. I mean, Jefferies sees ongoing risk of negative sentiment and downgraded 4 names actually in this space to reflect the AI risks and the framework we've seen here as far as company-specific factors. So for Workday in particular, they see an execution risk here, saying that the CEO and some of the executive changes means its medium-term growth bar needs to be lowered once again. Because as I mentioned, we have seen this stock selling off quite considerably. I mean, that chart really says it all, doesn't it, Nicole? I mean, there is a view that this return of Bushry is likely driven by some of that decline as well. I mean, that change in executive leadership. The company has been acquiring AI tools, we know that, but they just haven't appeared to resonate with the market. So there's hope that the co-founder's return actually might help some of that. The company has been announcing some of those layoffs as well to reallocate money to other parts of the business. It's shed more than 20,000 workers, but there's a feeling somewhat with this executive change that with the damage in investor confidence, the terms of the strategy and the direction, you know, the market might not just be buying that at the moment. But I mean, as I mentioned, this is a name that continues to be dragged down by the overall sector. I mean, I think, the AI disruption fears have really impacted some of these names, not to mention Workday, and we'll hear from this company tomorrow. So let's see what they have to say. But I suppose, given some of the notes we're hearing from the analysts, the bar is pretty low for this one.
Yeah, so the downgrade there at Jefferies for Workday, DocuSign, VF Corp, which has North Face and Timberland and some of those great names, also got a downgrade, as well as Deere, which I'm seeing down about 0.25%. Tell us the Deere story.
So Deere is interesting because obviously we got those earnings out last week, which actually looked quite good. They were quite strong. So we've got Jefferies once again downgrading Deere to underperform now from hold with a price target of 550, though. That's up from 475. Look, basically there seems to be hope that the farming economy will improve this year, but Jefferies just not so sure right now. It seems to be the view that they're paying the market today for earnings that might not arrive to 2 to 3 years. So basically they're saying that while the agricultural cycle should trough this year, a recovery will require an improvement in US farmer incomes and crop prices to be the key driver here. But it's interesting because if you take a look at some of the other analysts' notes this morning, Nicole, I mean, Wells Fargo seems to think that earnings are about to improve enough to justify the higher valuation here. I mean, they've actually raised the firm's price target to 750 now from 543. They've kept overweight on the shares, and they see the valuation dominating the debate right now over higher incremental margin outlook and an inflection across both construction and agricultural machinery supply. So it seems to be a bit of a mixed view out there on this name right now.
Yeah, absolutely. So a lot to watch there. DoorDash, also another name you could check out, folks. That's down about 7%. Sam Vadas, thank you. Great to see you.